Focus, I have my co-anchor who is joining us to tell us about a micro-cap stock which is on his radar, Setco Automotive. The stock has been down 7% this month, but if you look at it from the time year to date, it's up around 16%. From June onwards, it's also gained more. But is the buzz worth it? Mangalam joins in to tell us more. Mangalam, over to you.
Indeed, Ekta. So when I saw the stock from June, it's moved almost 57%. The market cap of the company is about 650 odd crore rupees, and it's gained about 7% this week itself. So just wanted to know a little about the company. So when I looked at it, I found out that Setco Automotive is actually the largest producer of MHCV clutches in India. MHCV meaning medium and heavy commercial vehicles, and not rather a good market share. So who are the key clients? Take a look at a couple of clients. They have Tata Motors, Eicher Motors, we have M&M, Ashok Leyland, even Caterpillar and Volvo. As far as the international clients are concerned, they do supply to Daimler as well as Navistar also. So about the company, they have manufacturing facilities in Gujarat, Uttarakhand, even UK and US. Recently, they added about 188 crore worth foundry project, which the production of which commenced in April 2016. So that is one of the triggers, and the company is looking to double their foundry capacity going forward. So take a look at the sales from FY12 to FY16. The sales of the company have grown from 371 odd crores to 563 crores. So there is some sales growth seen. Even the EBITDA margins have progressively increased over the last 3 years from 10, 12 to 13% last year, and the net profit concomitantly has increased from about 18 crores to 23 crore rupees. But that has come with a bit of red flag as well. The red flag being the total debt has increased from 178 crores to 371 crores. And with this kind of growth in the revenue, the receivables have also increased from 70 crores to 111 crores. In the fourth quarter, the company posted a turnaround where the revenue grew by 35%. The margins came in at 17.6% versus 10%, and because of which the net profit grew by 5.5 times. And then I was looking through the management con call post the results. At the same time, the company released a presentation on the exchanges. So the management now guides for a revenue of 1,000 crores by FY18. It was 563 crores in the previous year. They also have a guidance of $1 billion in revenue by FY21. So this, if you take an interpolation or extrapolation rather, it implies a revenue growth of almost 64% for the next 5 years. And the management expects this to come from exports. The revenue from exports, the management expects to increase from 8% currently to 20%. Last quarter, we saw a sharp margin expansion at 17%, and that is something the management has said that the EBITDA margins will sustain at 17%. That we'll have to wait and watch whether that comes by or not, because if you look at last year, in the last 10 years, the revenue has grown by just 19% and the profit has just grown by 22%. These are a couple of shareholders, new and non-PE, as well as foreign institutional investors do hold some stake in the company as well. As far as Indian funds are concerned, a couple of other funds like IIFL and Barclays hold some stake in the company. At FY16 EPS, the company is trading at around 27 times, but the fourth quarter, the EPS was 1.2. So if we extrapolate that or interpolate that into the next 4 quarters, it could be around 4.8 or 5 rupees EPS in the next year. So we'll have to wait and watch how the company actually performs, because it has promised a lot.
Okay, Mangalam, thanks very much for that. So a complete comprehensive wrap on Setco Automotive. So